to the StockMeadow.com studios here in the Black Hills of South Dakota. I'm your StockMeadow Brian Johnson, and doing a little update for you guys. It is the middle of the week. Now, let's see where we have been over the last couple days. As we entered the new week, we talked about the fact that this was good for the Bears to see this thing finally break, and it was riding extremely well as resistance. We've now kind of fallen off from that. I'll tell you what, guys, the momentum to the upside is getting very, very, very tired. Today's move, we had an exhaustion gap type of an effect where what happens is market opens up. It was gap up to start the day. Didn't last long up there before it started to run itself down all day long. This was, by the way, textbook exhaustion gap. For those of you that maybe have heard that and just maybe had never seen one, take a look at like a 2-day 5 minute or whatever of the diamonds or the SPY or something. You'll see that gap up this morning followed by a nothing but a slow bleed all day long. So even though we only finished down 0.5% or 7 points or so on the SPX, it was a little bit more than that because of the gap up to start the day. So the bears are coming in slowly but surely. They're working their way in. Are we done? That's the $64,000 question. It's still too early to tell. Okay, but we are very, very close to the top. I would say that we maybe, if we head up from here, it's maybe one more push to the upside. So I'm sure a lot of blogs have been, talking about the big drop and the whole bit, and it's coming. It's really, really close. What we have here are three. I was when I did my subscribers video, I was kind of picking up on this as I rolled through the different charts we looked at. But you'll see that there are three different formations basically being formed in three of the different indices. There's the Dow, the SPX, and not the NASDAQ, but the Russells. And they're all bullish, but they're all different. In this case, what you have in front of you is what could be the potential of a bull pennant. Just a symmetrical triangle here. That could resolve upwards. The SPX is a finishing 5, potentially. The Russells is potentially a bull flag that's about to resolve to the upside. So, potential, potential, potential. We still need confirmation of that. Some of the caveats that we saw today were things like Apple got absolutely destroyed. It ran up and up hard for a while into about the 525 area, good strong area of overhead resistance, and then it dropped like a rock after that, finishing sub 500. So while it'll show it was down 11 points or whatever for the day, yeah, whatever. It was down like 30 points in about 2 hours, and that's important. That's important. So after its monster run up, the first kind of sign of weakness in Apple. I'm not saying that it's going to drop another 50 points tomorrow because Apple's a beast and I don't want to stand in the way of that thing, but it was a very, very good drop today, and the markets followed. All right, moving on with the Dow and what you see in front of us. What we could be doing, this is just a consolidation right here, okay? Your bigger lines to watch are still up above, I would say 12.9 and 12.650. If you really want to be conservative, those are the lines you want to be hitting as we go forward. So in the diamonds, those are the two areas, or whatever, however you trade the Dow. I don't know how you do that, but those would be the two areas you want to watch very closely. Okay, you want to be very cautious of anything over this area if you're short. You want to be very cautious of anything under this area if you're long. Watch and watch the next couple days. I'm not so sure that it might not tip its hat tomorrow, but if we see one more really hard push to the upside, game on. I'll be looking to probably not go long necessarily, but I'll be looking to maybe re-enter a lot of the short positions that I got out of today. Just lock and load. Just looking to reload if we go back up again. The story is really these 20-day moving averages, guys. And these are very, very important. We're right back into them on almost all of the indices, and those are the areas you've got to really watch closely. Those are going to be so, so very important going forward to watch and see if these things actually can break down below this area and then continue their way downwards for the bears. Now, bigger picture, I want to bring some to your attention. Since we've hit this 12.9 area, and this is kind of a fill in the blank, this is the same thing on the SPX. Since we've hit these upper areas here back towards the beginning of February, we've gone nowhere. And as the time, right now, it's still kind of a high base formation. So The Bears haven't really come storming in, but the Bulls haven't exactly gone away. So be very cautious up here. Don't get too biased. Just in case we do see one more push to the upside, you won't be caught off guard. But man, I'll tell you what, we get up into these upper areas, game on. I'll be looking to lock and load on some shorts for sure. Otherwise, from here, if we can drop back below these areas, 12.6, 12.650, it could be that could be it. This could be the top of what they've been talking about. This wave three, if you've been following it, it's like one, then two, and then one of three, two of three, three of three, four of three, five of three to end three, totally up here. Then yes, I would say that could be complete. We've been following this for a long time in the subscribers newsletter, and it looks like we might get our break over the next couple days. You just got to know what it is you are looking for in that respect. The NASDAQ as well, getting back into this 50-period moving average, hit 2,600, big overhead resistance area, and then as Apple dropped like a rock. Matter of fact, I'm not so sure the NASDAQ wasn't driven by Apple today. Straight up, straight down. This is exactly what you'll see if you look at an Apple chart. Very similar to that. Apple, by the way, is something I cover every day in my subscribers newsletter for those of you that like to play it. The NASDAQ daily looks like a bearish engulfing, but we need some confirmation. This could, kind of run sideways the next couple days or gap back up or whatever. So I really like the push we saw today, but I'm not completely sold on it just quite yet. But a very strong day nonetheless, as the NASDAQ was the weakest, down 0.75% or almost 20 points by the time it was all over. From weekly perspective, yes, right now as of today, this looks like a beautiful reversal candle, but these are weekly candles, so this will not complete until Friday. By that time we could be back above 2,600. As it is right now today, looking very nice, and it is so long in coming. So we'll see how this closes by the end of the week, but this is definitely something you want to be watching as we roll into the last couple days of the week. SPX 60 back to this really nice, strong level of support that we've had. A lot of the other indices doing some of the same too, finding levels of support to kind of rest on, but the SPX in particular, so very pretty here. If you want to call this down here, 1, 2, 3, 4, A, B, C, D. We could potentially have one more left. That would be E to the upside. But I will tell you, you don't always get those moves at the very end. They like to fool you, like to psych you out. So I'm going to be watching my futures here very closely in the after hours for any sign of weakness within the markets themselves. Resting comfortably here on this 1340-ish area, 45-ish area. That's where we entered it back in early February, and you can see we really haven't moved very far. But the consolidation has been somewhat decent for the bulls. I still got to give them credit. They've been the ones that have been able to drag this thing back up just when you think the bears are going to roll in. The bulls come rolling back hard and fast, and they drive this thing up. We saw it yesterday. If any of you were watching it, at the very end of yesterday's close, it looked like, this could be a potentially kind of bearish day, and the bulls came in on their white stallions and they just drove it up hard into the close. And then in the after hours, another huge pop in the after hours, taking it up and into these upper levels, and that's why we saw the gap up this morning. So the bulls just don't want to let go. They're holding on with every last bit of strength they got, but they're really getting tired up here. So if you're into the long stuff, be very cautious. The bears are coming. They're growling. Okay, so anyway, back below some of these lower areas, if you can get it back below 1320-ish or so, I think that's a very conservative place to be looking to either exit longs or maybe even enter a short position. Here's your 20-day moving average. We're not as tight with this one as we are on some of the other indices, but this is definitely one to be watching on any kind of move back down and or for potentials in your trading, either out of longs or into shorts, however it is you want to do that. But the SPX looking very tired up here. The VIX as well, also seeing a bit of a spike, 8% today. Very nice move. Getting stopped yet again by this 50-day moving average. So it's holding up pretty well. More importantly to me is that we are back above the 20 range, showing a little bit more fear creeping into the market. We'll see if that'll continue on the push to the upside. If the markets drop tomorrow, look for the VIX to spike hard and get up and past this 50-day moving average. Here it is on a weekly. Could come back into these areas. Matter of fact, for the week, if we see a strong move to the downside for some reason, this is exactly where I would expect to see us stop for the week. That would be a huge push, though, quite a ways away. So probably a little premature in calling that type of a target out, but if the markets drop, they'd have to drop pretty hard. But anyway, watch for the VIX then to really spike considerably as well. That does not close until Friday. FAS 60 minute, this has been chopping sideways. I had a couple entries for you, to be quite honest. I don't remember where they were. I really don't remember where they were at. This is all sideways. I'd be very, very careful in through here with the financials. Obviously, I think things are waiting and banking on this whole Greece thing, which has been back and forth forever. I'm just tired of it at this point. Get it resolved. Figure it out. Let's move on. But as you can see, we are up above the 200-day moving average, and this has been the area to hold, and it has very well for about 2 weeks now or so. This will be the one that'll be very carefully watched. This is what you want to be watching for as well on the FAS tip. Anything back below, I don't know, the 20-day, you want to be extremely cautious about if you are long. Otherwise, a great opportunity to maybe take a short position there. And from the FAZ position, same thing, straight sideways, nothing to work on. I love 27.50 to the long side and back below 25 to the short. We are working on what is a ginormous falling wedge. So if this resolves itself, the target could be upwards of $385.43. I'm not serious. I would think we would at least get back into the 50-day, and that is quite a jump. That's 33 bucks right now. So, 8 to 10 bucks in the FAZ once we break up and out of this thing. Very possible. Might take it a while. It's not going to go there in one day or anything, but very, very possible here. So you're watching as well the 20-day moving average for you FAZ players. I'm watching the same thing, and we'll probably take a trade in that as well if and when we get above that 20-day moving average. Okay, takes us back to the beginning of the video. Good stuff, guys. Oh, we are so close. You've probably heard it. You've probably read it, but I'm here to tell you. We really, 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 really are. I sent out an email this morning to my subscribers. I don't send a ton of emails during the course of a day, but this morning I sent one to them before the market opened saying, hey, you need to be very cautious as the markets are going to gap up. I really don't think they're going to last up there. I think they're going to run down from there, and I mentioned it in yesterday's video to them as well. So we were able to do very well on our trading today based just on that information alone. I do these videos every day for my subscribers except for Saturday. Sign up, $1 a day, 28 bucks a month. It's pretty cheap actually overall. I have a trading room that we run all day long. I have mentoring courses, which is basically going back to college and learning how to trade all over again. It's really an in-depth course. With after the course is over, I'm still at your disposal. You can call me, write me whenever you want to about things. I'll be more than happy to help you out even after the course is over, which is invaluable to people because if you're gonna have questions, period, and things you didn't think of during the course, and when you can't get a hold of your instructor has been the #1 thing that has bothered people about courses that they've taken elsewhere. I can't get a hold of my instructor. I can't get any help, and I'm frustrated. So that was one of the things I just put into my mentoring itself. I'm yours forever, so you can pick my brain for as long as you want. I also do stuff within the mentoring course that involve, teaching you options. We learn Elliott Wave. If you guys haven't taken Elliott Wave, I'll run you through my Elliott Wave course at no charge. Just a lot of little things that go along with that as well. You can write me, call me about that. I'd be more than happy to pick it to send you something on it. And then the new product's coming out too for those of you that want somebody to manage your money for you. I'm that guy. You let me know and we can talk about that as well. That fund's been underway now for a little while. We've been working on it pretty successfully over the past 3 months or so. Just getting things up and running. I am Series 3 certified now, and so I'm looking forward to that new adventure as well. All right, guys, that's it. We'll see you guys maybe this week. I don't know. We'll see what kind of action we get. I might do a Friday wrap-up for you or one over the weekend for all of you guys. And then we'll hopefully then we'll talk to you before the weekend's over. Remember, next Monday, the market's not open. No trading on Monday. So I'll be back with you sometime, maybe middle of next week. Bye.